Hello, my name is Wes Estes with Remax Commonwealth. Today, I had the good fortune of talking with Rob Heare with Thurston Heare Insurance. I'm going to be asking Rob questions that I often hear in the real estate world. Questions such as, what's the difference between replacement cost and appraised value for a home? Or another common question I hear is, hey, my neighbor's tree fell onto my yard. Who's responsible for that? Who's responsible for the cleanup? And I'll ask some questions such as liability limits and what that means with respects to auto and home insurance. You'll not want to miss out on this conversation. With that said, let's get started. Rob, thanks again for taking the time to join me today. I'm sure all the listeners will love to hear some of the answers you're going to provide with some of the questions I have for you. But before I actually get into that, I want to share a little bit about who Rob Heare is. And I think it's probably best if I so I don't mess anything up, I'll kind of glance over and make sure my notes are correct here. So Rob has been married to Abby for 43 years and has 3 children and 4 grandchildren. I mean, that's got to keep you busy right there, almost as a full-time job, right?
It's all good. It's all, as you know, children are a blessing, and so are grandchildren.
Yeah, absolutely. And congratulations. I mean, 43 years of marriage. I mean, you just don't hear that a lot in
Thank you.
today's world. So that's fantastic there. All right. So you're from Hagerstown, Maryland, and started with the Erie Insurance Group as a claims adjuster in 1979. In 1983, you were promoted to district sales manager and you moved to Richmond, Virginia. And in 91, you moved to Raleigh, North Carolina, and helped open the state to Erie Insurance. So was Erie not in North Carolina at that time, or they were just trying to get?
No, that was their first foray into North Carolina. I mean, they're very big down there now,
Yeah.
but yet at the time it was exciting. It was an opportunity to do something new. Erie's a good company. I had been with them, and going into a new state was just a very exciting opportunity.
Well, that's fantastic there. Okay. And in 1993, you were promoted as the assistant VP branch manager of Richmond branch office. You moved back to Richmond. And in 99, you left Erie and joined Ralph Thurston to form Thurston and Heare Insurance. And this is your 40th year in business. Is that correct?
Correct. It's the 40th year for the agency.
For the
Like it
agency.
says, I joined in 99, but Ralph and Mary actually started the agency in 81.
Fantastic. Okay. And you guys are an independent insurance agency and you're licensed in Virginia, Maryland, and North Carolina. Is that right?
Correct.
Wow. That's a lot of years of insurance between you guys. I mean, you obviously know the insurance business. All right. Well, Rob, let's get started. I've been in real estate for 21 years, and there are some specific questions I want, I hear over and over, and I just want to get a little bit of insight, especially when they pertain to insurance questions and things like that. As you know, I reach out to you anytime I have a question that pops up regarding insurance and real estate and anything like that. Can you tell me the difference, Rob, between replacement cost and market or appraised value?
Sure. And that is a great question. It's one that I get a lot. And the simple answer, Wes, is you deal more with market value.
Mhm.
Insurance, you deal with replacement costs. The difference being, when I look to insure somebody's home, or if they have additional outbuildings, I want to make sure as best I can that if something unfortunate happens to the home, that it burns to the ground, they've got sufficient coverage to rebuild it. The difference being, when you look to sell a property, you take into account the land, possibly the location, things of that nature, which from an insurance standpoint, you don't insure land. So, for example, you might have a 2,000 square foot house on 20 acres in Chesterfield County that, because of the location, because of the land value, you list for $600,000. We look at that 2,000 square foot house from a replacement cost standpoint, depending upon how it's built, and it's probably going to be replaceable for, even on the outside, $400,000, which equates to about $200 a square foot. Where that sometimes comes into play is when individuals get a mortgage. There are times that we will be asked to put insurance on the property to the same amount as the mortgage. And sometimes that means people are paying for insurance that they would never use. And in Virginia, by law, mortgage companies are not allowed to do that. So we don't run into it a lot anymore, but we still see that sum on a home closing. The other thing to keep in mind with replacement costs from an insurance standpoint is people should be with a company that guarantees replacement costs. You and I have talked before, all insurance companies, all insurance products are not the same. And there are companies out there that do it on an actual cash value basis, meaning the amount of coverage listed on your declaration page is what you have. There are many companies that say it's guaranteed replacement costs, but they cap it. And there are a couple, one of which I represent, that are true guaranteed replacement costs that's no cap, meaning you have a $500,000 house, it burns to the ground, it costs $650,000 to rebuild. That's what the company is going to pay. So that's, in a nutshell, that's what I look at and try to explain to people. Now, there's some other things that come into play. For example, if it's a home that has a large outbuilding, then you want to look at the value of the outbuildings because there's limitation on coverage within the policy to make sure they are properly insured as well.
Well, let me ask you this, Rob, because you bring up a good point there. So we're in an area here that has a lot of historic homes. So, and in certain areas, those historic homes might not appraise for as much, but to replace one of those guys, how does that work, or how would that play out? Replacement costs.
Kind of the reverse discussion I have with people because I insure a few of those historic homes. And again, kind of like real estate, location means a lot. And what happens then, my discussion is you've got a home that, because it's historic, from a replacement cost standpoint, it could cost a lot more because of the type of materials. If it's got really ornate moldings in it, some ornate woodwork, maybe it's plaster instead of drywall. And what you run into sometimes there is using that 2,000 square foot home I had as an example. Let's say it's a 2,000 square foot home built in 1865 that's, a solid brick structure. Maybe it's in a market area where it sells for, I don't know, $300,000-$400,000. To replace it might cost $500,000.
Right.
So that's kind of the reverse. And you're right. And we do run into that some because of the surrounding areas, the city of Richmond, the city of Petersburg. I mean, there's some beautiful historic homes. And it's really a matter of sitting down, talking to people and explaining what we're looking at, what they need to be concerned with, which is why I like to meet with people. And I can show them things that you can't really show them just giving them a quote over the phone.
Gotcha. Okay, that makes sense. Okay. Well, another question I hear too, Rob, we're talking about properties here. All right. So you have a neighbor that has a tree and it falls over onto your yard. How does that, who's responsible for that? Like, who's responsible for cleaning up? Or if there's some damage? I mean, how does all that play and work out?
Another great question, and one we get a lot this time of the year because the winds pick up around here, as you know. If my neighbor's tree is healthy, blows over on my house, my insurance is responsible for taking care of the damage and the tree, because what they look at is the tree was healthy. We had a 60-mile-an-hour wind. It uprooted the tree. My neighbor wasn't negligent. For the neighbor's policy to pay in a case like that, the neighbor would have to be negligent. An example of that is I had a client whose neighbor had a tree that was completely dead and should have been removed. And I advised my client in that case to write a letter to the neighbor, send me a copy of it. So I've got it advising them that, look, your tree's dead. You need to get this removed, because that's a case where if it should have been removed, if it's a dead tree, it blows over on my house, they're negligent. Their insurance company would be responsible for taking care of my damage. But most of the time, Wes, because the trees are healthy and we get a lot of rain, we get the strong winds, it blows over on the neighbor's fence, it blows over on the neighbor's house or outbuilding, then the individual's homeowner's policy should take care of that, whose property the tree lands on.
Okay. All right. It's good. It's good to know there. So it really depends on the situation. Like the neighbor, like if they, like I said, if they have a dead tree sitting there, you reach out to them, they say, I'm not doing anything, and it falls over, then their insurance would be the ones that would cover it, not your insurance. Now,
Correct.
would that be the insurance persons talking to each other to determine that, or how does that kind of work? I mean,
Yes, and generally what would happen in a case like that for the ease of getting the claim handled, if it's our case, if it's our client, we'll turn the claim in under their insurance, let their insurance company handle it, and then the insurance company will go back against the neighbor and the neighbor's company to get reimbursed for, if there's a deductible, or to get reimbursed for what was paid out. Because another instance we've run into in this area, because there are a lot of beautiful trees, is not the dead tree situation as much as it's a nice healthy tree, but maybe it's on the line and it's so big that the tree limbs are overhanging the neighbor's house. Well, again, the owner of the tree is responsible for getting those tree limbs trimmed. So it does become an interesting situation. But yes, we advise people, let's turn it in under your homeowner's insurance so that you're taken care of, and we'll let the insurance companies talk to each other and work it out.
gotcha. Okay. That makes sense. All right. So with the pandemic, the last 18 to 24 months, a lot of folks are now kind of leaving the brick and mortar and opening up or doing work out of their home. How does that play into the insurance and everything else? If they got people coming to their house, or how does all that play out?
Okay. Yes. And I actually read, I think like 65 to 70% of the people that have in-home businesses don't insure them. Many people, if you bring this question up, just automatically think their homeowner's insurance covers them because, hey, I'm working out of my home. Within all homeowners policies, first of all, from a property standpoint, there are limitations on coverage. They give very little coverage, for example, for sales samples, or if you've got your computer in your house, you're working from your home, it's business related. Where I actually see this a lot is landscapers and lawn care individuals, because they pretty much all work from their home and they've got all their business equipment stored in their garage, and think if something happens to it, it's covered under their home and auto policy, and there's virtually no coverage. The other side of that is the liability piece. And I have people tell me that, well, I work from my home, nobody ever comes to see me, I go out to see my clients. The challenge there, and what I usually ask them is, that's all well and good, but you get anything at all delivered to your house as it relates to your business, whether it's mail, could be Amazon, could be UPS. Most people get something delivered. And when you do that, you've got a liability exposure. For example, winter is coming, sidewalks are going to need cleaned. I don't get my sidewalk cleaned, UPS is delivering something to my house, business related, slips and falls on the ice, breaks a leg. Homeowners insurance has a very specific exclusion under liability for any type of business related incident. So you would have absolutely no coverage for that. And
Wow.
that's where I really go with people to impress them is, you may not have that much personal property that's business related, but liability is what's going to protect your assets. And that's really what you want to focus on. And most in-home businesses, it's very reasonable to insure them.
Gotcha. Okay. All right. And we're kind of running out of time here. So let me hit you up with one last question on this.
Sure.
Tell me a little bit, or discuss liability limits, both when it comes to auto and home.
Okay. Well, the biggest thing we advise people is don't take minimum limits. For example, in the state of Virginia, under auto, I believe the requirement is 25,000 of liability per person, 50,000 per accident, and it's either 25 or 50,000 for property damage liability. So that protects you if it's your fault, you're in an accident, you hurt somebody. So the example I give people there is using the $50,000 property damage liability. That's how much, if you're in an accident and you damage someone else's vehicle and you total it, once the company pays that limit, they're done. Some people think that, well, because that's my limit and they're done, then I'm out of the claim. The reality is you're not. you're still responsible. So, with the price of cars these days, it doesn't take much. A new Toyota Highlander is going to cost you $50,000. Some of the pickups that are on the road, or a Mercedes, or we're seeing more and more of the Tesla, the electronic cars, those are $100,000 cars.
Right.
So if you unfortunately total one of those, once the company pays their $50,000, you're now personally responsible for the rest. On the homeowner's side, we recommend people take at least $500,000 of personal liability. Again, it's not a huge expense to add that to your homeowner's policy. And what I explain to people there is, if you have pets, what if you might have the nicest dog in the world, but I move suddenly and it bites me? Or if you have children and other children are always over your house, or they're running through your yard, to me, it's peace of mind. And people need to look at liability as what protects their assets. We all work hard, nice house, nice car, and unfortunately things happen. And the liability is what protects your assets.
Gotcha. Okay. Man, Rob, there's a ton of questions. This thing could go on for on and on. I'm just sitting here talking with you, and I like 5 other questions just popped in my head here. So how would someone get in touch with you? What's the best way to get in touch with Rob Heare?
So office phone number is 804-717-8283. My cell phone is 804-405-1369. My email is rhaire, HEARE, at, and I'll spell it out, THURSTONANDHEARE.com. Probably the easiest way is my cell phone. It's with me all the time. They can text me, they can call, leave a message, because just like you, Wes, I'm not in the office all the time, and I'm on the road a lot. I'm meeting with people a lot. I can't always answer my phone, but I will promise that if I get a message, I will call you back as soon as I can.
He's good on that. Rob, give me that cell phone number again. Kind of, we had bad connection there and it was kind of fading in and out. So can you give me your cell number again, please?
Sure. It's 804-405-1369. Great.
Yeah, you got to remember the 804 now. I can't tell you how many times I dial a number. Sorry, we can't. Got to put.
I did the same thing. I'm with you.
Well, Rob, thanks again for your time. I appreciate this. And if anybody has any questions regarding insurance, Rob Heare is the person to go to. Thanks again, Rob.
Thanks, Wes. Thank you, and have a good day.
You too.